Hello traders, Gary Wagner here, just about noon in Honolulu, 5 o'clock in New York. It is Wednesday, January the 17th, 2018, and this is the Daily Report for Gold and Silver. Pretty wild day in the market today with equities just raging again, going to new all-time record highs. Gold, interesting action. It was up for the morning, then trading down a couple of dollars, but as we went into the close, it really came under selling pressure, settling down $8.10, $13.29. 1703 in silver, that's down about 15 cents, and that is with a higher dollar, up 0.3% at 90.49. Now the big news again was the Dow. The Dow closed over 26,000 points, first time in history. S&P, NASDAQ, all of the indexes following suit with higher prices, and the bubble continues in Bitcoin. Bitcoin losing a tremendous amount of value, actually breaking below 10,000 earlier in the trading session to close at 10,710. That's a CBOE, and 10,750. Now, the expiration for the CBOE contract came due today, and that might have had something to do with it. Lastly, on an editor's note, this morning we sent out a survey. It's a very quick survey. I believe we have a total of 4 questions. And please, it's very important to us that you spend 2 minutes and fill it out so we can provide you with the best service possible. Traders, this has been one interesting day with some pretty decent volatility in the market. Interestingly enough, the market was trading up slightly higher for the better part of the morning session, trading about $2 to $3 higher. That was due to a weak US dollar, adding some tailwinds to the strength of gold. And that kind of all turned around about mid-session as we went into the close, because the dollar went positive, and whether it's through profit taking or simply initiation of short positions, we had this market move from a couple dollars up to a couple dollars down, and then began to trade off pretty aggressively. You can see that expressed through this single candle here, which is a large red candle with gold currently trading at $1328.50, putting it down about $8.60 on the day. Now, what I think is the one factor we want to hone in on more than anything else is the low that came in today, because as you can see, the low came in at roughly $13.27, and that also really corresponds very closely to the 23.5% retracement, and it is my sense that this particular price point right here should provide some support in the market. It is definitely not a major level of support. It is a minor level of support, but nonetheless, it is a supportive level. And you can see that by the virtue of it being an area of resistance right in this area before the market popped back up. Of course, this is when the market was consolidating. And traders, given that this rally has now moved in terms of pricing over $100 from low to high, and that is a very acceptable, normal rally that's of moderate strength, we realize that at any point we could see some sort of correction, and this in fact could be that point. We're not sure of that yet. We do have stops in place. Our stops are in place below 1321, which would put them at about 1320. Of course, we are long at 1265. So even if we get stopped out at the 1320, we will get stopped out with a sizable profit. When we look at the single candlesticks themselves, we do have somewhat of a variation off of a 3-river evening star. The reason I call it a variation, it does come in after an uptrend. The star is perfectly gapped above the green candle. However, for it to be in its purest form, the 3-river evening star, this red candle would have to have a body that would be below the star itself, which comes in right here. And so for that reason, I label it a variation. Of course, you would not take this kind of a call to initiate a sell signal without a confirming candle. And a confirming candle for this particular group, here you have a Three River Evening Star. And the way that I'm looking at it is you've got the green candle, you've got your star, and then you've got your red candle. It's still a variation, but as you can see, the body size is pretty much below it. The confirming candle would come the following day, and it would have to be a red candle with a lower low and a lower high, and that would be a confirming candle for this pattern group. If in fact that is how this market unfolds, it will most likely unfold, stopping us out on the trade. In any case, the other thing that we want to look at is an incredible spike in volume. Take a look at the volume that came in today, almost 500,000 contracts being traded. And then lastly, as we are now in the middle of January, we want to start thinking about either exiting the trade as a rollover and moving to the next most active contract month, which would be April gold, or if the market does show some weakness and stops us out, but we see there's further downside potential, sit on the sidelines and then re-enter the market during the next leg of this market move, but do that in the April contract month. Therefore, traders, my recommendation is currently to maintain our long position, keep our stop where it is. If we do get stopped out, we get stopped out with a nice profit. If we do not, that would mean that the market is probably still moving higher. And traders, lastly, I do want to take a look at Bitcoin. This being Bitcoin Cash right now, tremendous pressure once again in the cryptocurrency. Another strong, harsh move down. We talked about the move yesterday in which we saw this market go from just under 14,000 to trade to about 11,000. But today we had follow through because we actually traded, and on an intraday basis, we went to 9,000 plus on the cryptocurrency. We are certainly seeing an absolute meltdown in the market, breaking through what we would have believed to be a pretty decent level of support at around 1100. Where this currency is headed at this point is anybody's guess. In terms of a technical basis, we have real strong support, but that comes in around 5,800. And then when we look between that area and this area, you can see that there's no real area that we can identify a point in which there was former support or resistance. This is a new contract. This is a new commodity, and it's absolutely an untested asset. So with that in mind, let's see where this market wants to go to. But I can tell you this, I have enjoyed one of the most wild rides ever witnessed in terms of volatility in a market. My sense is that it is the blockchain technology that has real value and not the cryptocurrency itself, because there's multiple cryptocurrencies. And so the value that is being assessed on these cryptocurrencies are being assessed simply by market sentiment, and they're not being backed by anything except that particular item, market sentiment. And so for that reason, we could see continued wild volatility in the market. Finally, we did send out a survey today, and it's really important if you could please spend a couple of minutes and fill it out. What we're looking for is some feedback to make our program better, and we also want to know what we're doing right, and I would hope that you would honor us with a testimonial if you feel we've done the kind of job that's impacted your life. So I hopefully will see some testimonials come in over the next couple of days. Thank you very much. Traders, for the first time since we've really seen this rally begin, we have had actually a pretty strong sell-off. We've had consistent up days, and as a matter of fact, we had 4 consistent up days which ended today. Now, what surprised me was the extent to which the market sold off on the close. What also was interesting is the low matches up exactly to a Fibonacci retracement area, 23.5. At the same time, we have stops just below 1321, so they're at 1320, and there is a likelihood that they'll get hit, but if they do, we will go out with an extremely nice profit. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.